Nearly 1 in 3 Canadian renters now spend more than 30% of their income on housing. And in some major cities, rent prices have jumped by double digits in a single year. But here's the part no one is talking about loudly enough. In certain provinces, landlords can legally raise rent on newer units without any cap at all. That means the place you moved into thinking it was affordable could suddenly cost hundreds more next year. And for many tenants, these changes didn't feel gradual. They felt like they happened overnight. Across Canada, rental laws have quietly shifted. Small policy updates, exemptions for new buildings, inflation-linked increases, stricter screening rules. Each one may seem technical on paper, but when combined, they're reshaping the rental landscape in ways that are catching tenants off guard. Some renters are opening renewal notices and seeing numbers that make their stomach drop. Others are learning that protections they thought existed simply don't apply to their unit. So what exactly changed? And more importantly, how could these new rules affect you next? Stay with me, because what we're about to break down could save you from a very expensive. Number one, removal of rent caps on new buildings. Here's where things start to shock a lot of tenants. In several Canadian provinces, newly built rental units are exempt from rent control. That means if your building was first occupied after a specific date set by the province, your landlord may not be legally limited by annual rent increase guidelines. In simple terms, there may be no cap on how much your rent can go up once your lease term ends. The original idea behind this rule was to encourage developers to build more housing. Policymakers believed that removing rent caps on new construction would attract investment and increase supply. And while construction has increased in some areas, the side effect is something many renters didn't see coming. When market demand is high and vacancy rates are low, landlords of these newer units often raise rent to match or even exceed current market prices. Imagine signing a lease for a beautiful, modern apartment, feeling secure because you budgeted carefully. Then a year later, you receive a renewal notice with a $300 or $500 increase. Completely legal, completely within the rules. For many tenants, this feels less like a normal adjustment and more like a financial shock. So what can you do? First, check when your building was first occupied, not just when you moved in. Second, ask directly whether your unit is subject to rent control guidelines. And third, plan your budget assuming flexibility in future increases if you're in a newer property. Because in today's rental market, knowing whether your home is protected or not can make all the difference. If this opened your eyes, well, tell us in the comments. Has your rent increased more than you expected this year? We read every single one. We put serious effort into breaking down these complex rules for you. So take 1 second, hit subscribe, and stay ahead of changes that could cost you hundreds. Number two, inflation-linked rent increases. Now let's talk about something that sounds technical, but hits your wallet in a very real way. Inflation-linked rent increases. In several provinces, annual rent increase guidelines are tied to the Consumer Price Index, CPI, which measures how much everyday goods and services are rising in cost. When inflation goes up, the allowable rent increase often goes up too. On paper, this seems reasonable. If everything costs more, from maintenance supplies to property taxes, landlords argue they need higher rents to keep up. And economists often support this logic, saying it keeps the rental market stable and predictable. But here's the catch. When inflation spikes quickly, rent increases can jump faster than tenants expect. Think about the past few years. Groceries went up, gas prices surged, utility bills climbed. Now imagine your rent increasing at the same time, not by $20 or $30, but by hundreds over the course of a year. When wages don't rise at the same pace as inflation, renters feel squeezed from every direction. And here's something many tenants overlook. Even if the government sets a guideline, landlords can apply the full allowable increase each year. It may not feel dramatic at first, but compounded annually, those increases can significantly raise your housing costs over time. So what can you do? Start by tracking the official rent increase guideline for your province each year. Build a small buffer into your budget. And if possible, consider negotiating longer lease terms for more stability. Because when inflation rises quietly in the background, your rent may be climbing with it. Drop a comment below and tell us, did inflation hit your rent this year? and by how much. Your story might help someone else prepare. If you value clear, honest breakdowns like this, hit subscribe. It's just one click, but it helps us keep creating content that protects your wallet. Number 3, fixed-term lease loopholes. This next change is subtle, but incredibly powerful. It revolves around something many tenants sign without thinking twice: the fixed-term lease. On the surface, a fixed-term lease feels secure. You sign for 1 year, you lock in your rent, and you assume that once the year ends, you'll either renew under similar terms or move to a month-to-month agreement. But in some provinces, landlords are not automatically required to renew that lease. Here's where the loophole appears. When a fixed-term lease ends, a landlord may choose not to renew it and instead relist the unit at a much higher market rate. Technically, they're not raising your rent. They're simply offering a new contract at a new price. And in tight rental markets with low vacancy rates, tenants often have little leverage to negotiate. When a housing policy experts point out that this practice becomes more common when demand is high and rental supply is limited. If similar units in your neighborhood are now going for hundreds more, landlords have strong financial incentive to reset the price between tenants or even between lease terms. Imagine planning your life around stability, your job, your child's school, your daily commute, only to learn your lease won't be renewed unless you agree to a steep increase. It doesn't feel like a normal adjustment. It feels like starting over. So what can you do? Before signing, ask what happens at the end of the term. Clarify whether the lease converts to month automatically. Start renewal discussions early. And always understand your provincial tenancy rules before assuming you're protected. Because sometimes the biggest changes hide in the smallest clauses. Have you ever faced a surprise at the end of a lease? Share your experience below. Your story could guide someone else through theirs. We invest real-time researching these topics for you, so if this helped, tap subscribe. One click keeps you informed and keeps this channel growing. Number 4, above-guideline rent increases, AG is. Just when tenants think there's a limit to how much rent can rise each year, another surprise appears. Above-guideline increases, often called AG is. In some provinces, even if there's an official rent increase cap, landlords can apply to raise rent beyond that limit under specific conditions. And yes, it's completely legal. So how does this happen? Typically, landlords argue that they've faced significant increases in operating costs, things like property taxes, insurance premiums, or major repairs and renovations. If approved by the local housing authority or tenancy board, they may be allowed to pass part of those costs on to tenants. On paper, this sounds fair. Buildings need maintenance, pipes burst, roofs leak, elevators break down. But for tenants, more of the financial impact can feel sudden and overwhelming. Imagine receiving a notice that your rent will rise not just by the standard 2 or 3%, but by an additional amount because of capital expenditures. For someone already budgeting tightly, even an extra $100 a month can strain finances. Housing researchers note that as maintenance and insurance costs have risen across Canada, applications for AGs have become more common in certain areas. That means more tenants are encountering increases they didn't expect. So what can you do? First, request clear documentation explaining the increase. Second, check whether approval from a tenancy board is required. And third, attend hearings or file objections if you believe the increase is unjustified. Because when you understand the process, you're no longer caught off guard, you're prepared. Have you ever received an above-guideline increase notice? Tell us what happened. Your comment could help someone else feel less alone. We put real research and care into every video, so if you appreciate that effort, hit subscribe. It's one simple click that makes a big difference. Number 5, stricter evictions and renovictions. Now we move into one of the most emotionally charged changes tenants are facing: stricter eviction enforcement, including what many call renovictions. This happens when a landlord asks a tenant to leave, claiming the unit needs major renovations, or that the property will be used for personal or family purposes. In some cases, it's legitimate. In others, it becomes a legal pathway to reset the rent at a much higher market rate. Here's why this matters. In a tight rental market with low vacancy rates, replacing a long-term tenant who pays below market rent can significantly increase a landlord's income. So when renovation rules allow temporary or permanent vacancy, the financial incentive becomes clear. On housing advocates and policy researchers have noted that eviction notices tied to renovations often increase during periods of rapidly rising rents. Imagine receiving a formal notice telling you that you must leave the place you've called home for years. Not because you missed payments, not because you broke rules, but because upgrades are planned. Even if compensation or notice periods are required, the disruption can be huge. Finding a comparable rental at the same price may be nearly impossible. So what can you do? First, understand what qualifies as a legal eviction in your province. Request written documentation. Verify whether permits for renovations have actually been filed. Keep copies of all communication. And if something feels questionable, consult your local tenancy board before moving out. Because when it comes to eviction notices, knowledge isn't just power, it's protection. Have you or someone you know faced a renovation or personal use eviction? Share your story below. Your voice might guide someone through a tough moment. We put serious effort into researching and simplifying these complex issues. So if this helped you, tap subscribe. It's just one click, but it helps us keep fighting confusion with clarity. Number 6, shorter notice periods and faster turnovers. Here's a change that doesn't always make headlines, but can hit tenants hard. Shorter notice periods in certain situations. Depending on the province and the type of lease, landlords may be able to give notice within relatively tight timelines for specific reasons, such as property sale, major repairs, or changes in occupancy. And when timelines shrink, pressure rises. On paper, notice periods exist to give tenants time to prepare. But in today's rental market, where vacancy rates in many cities remain extremely low, even 60 or 90 days can feel like a countdown clock ticking too fast. You're suddenly juggling work, family responsibilities, and apartment hunting in a market where dozens of applicants compete for a single listing. The housing experts often explain that faster turnover benefits market fluidity. It allows properties to transition quickly between tenants. But for renters, it can mean scrambling to secure a new home, potentially paying higher rent simply because there's no time to negotiate. Picture this. You receive notice, and immediately your evenings are filled with viewings, paperwork, credit checks, and moving plans. The emotional toll can be just as heavy as the financial one. So what can you do? First, understand the exact notice requirements in your province. Don't rely on assumptions, verify them. Second, maintain a small emergency moving fund if possible. And third, start monitoring rental listings early if you suspect changes may be coming. Because in a fast-moving market, preparation isn't optional, it's essential. If you've ever had to move faster than you expected, tell us how much notice you received. Your experience could help others prepare. We spend hours researching these updates so you don't have to. If that matters to you, hit subscribe. One click helps us keep bringing clarity to complicated rules. Number 7, increase screening requirements for tenants. Finding a rental today isn't just about liking the space. It's about passing increasingly strict screening requirements. Across many Canadian cities, landlords are tightening their application standards. Higher minimum income thresholds, detailed credit checks, employment verification, reference letters, and even requests for months of bank statements are becoming more common. Why is this happening? In competitive markets with low vacancy rates, landlords often receive dozens, sometimes hundreds, of applications for a single unit. With so many options, they can afford to be selective. Property management experts argue that stricter screening reduces risk and ensures reliable rent payments. But for many renters, especially newcomers, students, freelancers, or gig workers, these standards can feel like a nearly impossible barrier. Imagine earning steady income as a contractor, but being rejected because you don't have a traditional full-time employment letter, or being asked to prove you make 3 times the monthly rent when housing prices have already stretched your budget thin. Even tenants with solid payment histories are finding themselves competing in ways they never had to before. This shift changes the rental experience entirely. It's no longer just about affordability, it's about presentation and paperwork. So what can you do? First, check your credit score in advance and correct any errors. Prepare a complete rental application package before you even attend viewings. Include references, proof of income, and a brief introduction letter about yourself. And if possible, maintain a consistent payment history on all bills to strengthen your profile. Because in today's market, preparation doesn't just improve your chances, it can determine whether you secure the home at all. What's the toughest requirement you've faced while applying for a rental? Share it below. Your insight could help someone else get approved. We put serious time and research into breaking this down for you, so if it's helping, hit subscribe. It's just one click, but it keeps this channel alive and growing. Number 8, different rules in every province. One of the biggest hidden challenges for tenants in Canada is this. Rental laws are not the same across the country. Every province, and sometimes even territories, has its own residential tenancy rules, rent control policies, eviction procedures, and notice requirements. What's perfectly legal in one province may be completely restricted in another. This creates serious confusion, especially for people relocating for work, school, or family reasons. You might assume that because your previous apartment had rent caps, your new one does too, or that lease renewals automatically convert to month, only to find out the rules are different where you've moved. That misunderstanding can cost you money. When housing policy researchers often point out that Canada's decentralized system allows provinces to respond to local market conditions. In theory, that flexibility is beneficial, but in practice, it means tenants must educate themselves every time they cross a provincial border. Imagine moving from one province where rent increases are tightly regulated to another where newer buildings are exempt from caps. Without realizing it, you may sign a lease with far fewer protections than you're used to. And because leases are legal contracts, once signed, your options can be limited. So what can you do? Never assume rules are the same nationwide. Before signing any lease, review your province's official tenancy website. Verify rent increase guidelines, eviction protections, and renewal rights. And if something feels unclear, ask questions before committing. Because in Canada's rental system, location doesn't just affect price, it affects your rights. Have you ever moved provinces and been surprised by different rental rules? Tell us what caught you off guard. We research these differences so you don't have to. So if this is helping, hit subscribe. It's one click, but it helps us keep delivering clarity you can rely on. Number 9, digital leases and mandatory online payments. Another quiet shift happening across Canada's rental market is the rapid move toward digital leases and online payment systems. At first glance, this sounds convenient, and in many ways it is. You can sign documents electronically, transfer rent with a few clicks, and receive notices instantly by email. But with convenience comes new risks that many tenants aren't fully prepared for. In the past, signing a lease often meant sitting across from a landlord, flipping through physical pages, and asking questions in real time. Today, agreements can arrive in your inbox with dozens of clauses written in dense legal language. It's easy to scroll, click, "I agree," and move on, without fully understanding what you've just signed. Some property management companies now require automatic withdrawals or specific online payment platforms. While this streamlines their operations, it can reduce flexibility for tenants. If there's ever a billing error or dispute, resolving it digitally can feel more complicated than having a direct conversation. There's also the issue of documentation. Emails get deleted, portals change, passwords get forgotten. If you don't download and store copies of your lease, payment confirmations, and notices, you could find yourself scrambling for proof later. So what can you do? Always read digital agreements slowly, even if it takes extra time. Download and save a PDF copy of every signed document. Keep screenshots of rent payments, and never feel pressured to sign immediately without reviewing the terms carefully. Because in today's rental world, a single click can carry long-term consequences. Have you signed a lease completely online? Did you read every clause? Honestly, share your experience below. We put hours into breaking down these changes so you stay protected. So take 1 second, hit subscribe, and help us keep creating content that truly matters. Number 10, low vacancy rates giving landlords more leverage. Now we come to one of the biggest forces driving all these changes, extremely low vacancy rates. In many major Canadian cities, vacancy rates have hovered around 1 to 2%. That means for every 100 rental units, only one or two might be available. When supply is that tight, the balance of power shifts dramatically. In simple terms, when more people are looking for homes than there are homes available, landlords gain leverage. They can raise prices confidently, knowing someone else is waiting in line. They can be stricter with screening. They can choose not to negotiate lease terms. It's basic supply and demand. But the real-life impact is intense. Imagine attending a rental viewing with 30 other applicants. Everyone dressed professionally, everyone holding paperwork. Cool, everyone hoping to secure the same space. In that kind of environment, tenants often feel pressure to accept higher rent, fewer conditions, or less flexibility, simply to avoid losing the unit. Housing economists often explain that low vacancy rates create upward pressure on rent prices across the entire market. Even if your building has rent control, surrounding market prices influence renewal negotiations, new leases, and landlord decisions. So what can you do in a tight market? Start your search early, weeks or even months in advance. Be prepared with documents before attending viewings. Consider emerging neighborhoods where competition may be slightly lower, and if possible, negotiate longer lease terms to lock in stability. Because when availability is scarce, preparation becomes your strongest advantage. What's the most competitive rental situation you've experienced? How many applicants were there? Share it below. Your story might help others feel less alone. We pour serious time and research into every video. So if this content helps you stay informed, hit subscribe. It's just one click, but it keeps this channel growing and fighting confusion with clarity. When you step back and look at the bigger picture, it becomes clear. These changes didn't happen in isolation. Rent cap exemptions, inflation-linked increases, fixed-term loopholes, stricter evictions, tighter screening, digital contracts, and record-low vacancy rates are all connected. Together, they've quietly reshaped Canada's rental landscape. And for many tenants, it truly feels like the rules changed overnight. But here's the important part. While the market may feel overwhelming, you are not powerless. The biggest mistake renters make is assuming protections automatically apply to them. In today's environment, you have to be proactive. You have to read the fine print. You have to verify whether your building is rent controlled. You have to understand your province's specific tenancy laws. Knowledge is no longer optional. It's essential. Think about it this way. A single overlooked clause in a lease could cost you thousands of dollars over time. A missed renewal deadline could force a rushed move. An unchallenged increase could permanently reset your housing costs. But on the flip side, one informed decision, one early question, can protect your financial stability. The rental market may be competitive. It may be evolving, but preparation changes everything. Stay informed, ask questions, document everything, and most importantly, never assume, always verify. Because in a market where policies shift quietly and competition is fierce, the tenants who understand the rules are the ones who stand the strongest. And in times like these, awareness isn't just helpful, it's protection